Hey traders, welcome back to another edition of the Market Preview. It is the Christmas edition. I'm your host Vasily, your trading coach and professional forex trader. And what is different in this weekly edition? You see the Christmas tree, you see the fireplace. I decided to create the entourage of Christmas. I decided to share with you this mood of coming holidays, coming Christmas. I'm very happy about that. I just decided to share with you my feelings. And I want to tell you that it is probably the last weekly edition this year. For sure, next weekend I won't trade, I won't record the videos, I will just drink and chill, and that was the entire goal of this year, to wait until this Christmas. So in this video we will discuss again the structure analysis. We will discuss the basics, the foundation of technical analysis, how we identify the key levels and how do we make predictions based on them. We will discuss gold chart. Yes, gold chart is the most popular, the most interested financial instrument among my followers, so we will focus on gold chart. It will be a very interesting video, I believe, and at the end of this video we will discuss some end year results. I will share with you some thoughts and some updates for next year. So don't forget to like this video, subscribe to my YouTube channel and leave a lovely comment. Let's start. Alright guys, before we start the execution of our structure analysis, the very important thing that we must note right here is that there are two types of key levels. We have the trend lines and we have the horizontal levels. Yes, trend line can be a key level and the horizontal level can be a key level. So it is a very important thing to remember. Trend lines are based on the highs or lows of the market, and they match the highs or lows of the market. Like here on the euro dollar, we have this trend line that was respected 3 times by different highs on the euro dollar, and the horizontal level is the level that respected by equal highs or equal lows. Yes, so right here you can see that here the price with the equal lows respected that horizontal level, and from there the price started to grow. So this is the main thing to remember, that we have two types of key levels. We have the vertical key levels, the trend lines, and we have the horizontal levels, the support and resistance. With that, let's start analyzing gold chart. Opening gold chart, remember that no matter which financial instrument we analyze, no matter which market we analyze, we identify key levels on higher time frame. And for me, higher time frame is the daily, 3 days and weekly. Yes, and we prioritize daily time frame because most of the time we have sufficient data on daily chart for the analysis of the market. We apply the higher time frames like the weekly only. We don't see any recent key level, and we need to analyze the historical perspective of the market for 5 or more years. Yes, that is the point. The best and the simplest way to identify the key levels on a financial instrument is to analyze the price action, analyze the impulse lags, and to identify the points, the levels that the market respected in the past, and from where we saw significant movements to the upside or to the downside. So what are you gonna do on gold? On gold, we will simply follow the price. We will follow the price and we will see how the price reacted this year. Yes, so from June, we will take that major impulse. Yes, here it was just a massive bullish wave. The market was growing and growing and growing. It was just a significant movement. But once the price reached that structure right here, once the price reached that high over here, we started to fall. Yes, and then afterwards we had a very strong movement to the downside right here. We reached that point over here. Yes, that structure low over here, and from that the price again retraced. So just follow the price. Yes, we bounced to the upside, then we dropped. Then we bounced to the upside again, and then we dropped again. Yes, and here we just follow how the price acted. Yes, we neglect the minor price fluctuations and we just take the major price movements, the most significant movements that definitely affected the market and where the market direction definitely changed. Yes, so here is our recent price action on gold. Yes, we have identified the major highs, major lows, and once we identify them, we can look for the key levels. What I always recommend to start with, the identification of the vertical levels of the trend lines. Yes, in my view, the identification of the trend lines is simpler than the identification of the horizontal levels. So let's focus on that first. And with the trend lines, we are simply trying to match the highs or the lows of the market. Yes, and we are looking for the trend line that was respected at least 3 times by the market. And look, over here, in my view, we have just the perfect example of the trend line. And the only thing that is tricky to us, it's tricky how to draw it with the exact angle. Yes, we can play with the angle and just checking the recent wicks, the recent price action. We sometimes can play with the angle of the trend line, and here goes the subjective part of the trend lines identification. So in such kind of a situation, I recommend you just to rely on wicks on the highest point possible of the price action. Yes, so here we took that structure high. Yes, here you can see that the trend line is a little bit above this highs over here, but it definitely touched that point and dropped from that. Here it touched that point and dropped from that. So we simply made the adjustment of the trend line. Yes, and also here, if we analyze the lows, yes, if we analyze the lows right here, over here, over here, we can draw another trend line. Yes, and here we don't even need any adjustments. We can simply match this lows right here, and what we see with you, we easily identified the falling channel. Yes, the channel that the price was following. Yes, and just recently this channel was broken. So we have identified 2 trend lines. One here, both right now serve as the support, because right now the price is trading above that. This trend line will be a strong support, and this trend line will be a strong support. And now it's time to identify the horizontal levels. Hey guys, and just a brief note that if you're looking for the exclusive content, if you're looking for more trades, more signals from me, if you're looking for the exclusive updates, give me a follow on Instagram. On Instagram I post a lot of exclusive things. It is at Vasily Trader. Just check it and subscribe. Thank you. After the identification of the vertical levels, after the identification of the trend lines, now it's time to identify the horizontal levels. And with horizontal levels, it's a bit tricky because we cannot pick all the levels that we see. Definitely we need to sort them, and we should take just the strongest one, the best one. And here it is very hard again to say precisely which level is the strongest one and which level is not the strongest one. Yes, and here we will rely on price action. So first of all, the key level, the reaction from key level must be significant. Yes, we should see a very sharp and strong reaction from a key level. Yes, that is the main thing about a key level. And also preferably the key level must be tested multiple times in the past. Yes, we are looking for the levels that are tested multiple times in the past, and we saw this kind of reactions each and every time the market reached them. So based on this criteria, I want to show you first of all this level over here. Look, why I like this structure level over here. Let's look left at structure and analyze the reactions of the market on that. So first of all, over here, very nice reaction, huge rejection immediately. Definitely after this sharp bearish rally, the price stopped falling once this level was reached. Then right here, look, again, very strong bullish reaction, very nice price fluctuation based on that level. Then over here, again, strong bounce, yes, then minor bounce. And after that, here just recently, again, the reaction. Each and every time the market reaches that level, each and every time it reaches that, the market reacts to that. Yes, and sometimes, yes, sometimes key levels can be broken, but most of the time when the market reaches this key level, you see how strong reaction we saw from that level in the past. So here is our first level. And by the way, a note here that the price here didn't react to the same level. We saw the price fluctuations from different levels within this yellow box. So we just unite all these levels in one and treat that level as the structure area. Yes, is the key area. The next level that I wanted to show you right here is the current structure low. Yes, current local structure low. Why that level here is important? We here rely just on the reaction of the market. You can see that once the price reached that level, we bounced. Not only we bounced, but also we have violated this falling channel to the upside. The reaction from that level was so strong that we managed to break even that major area of structure. Yes, major structure zone over here. So definitely we must consider that structure over here. Then looking higher, yes, what do we have higher? And here, look, we have one more very peculiar structure level. And again, you see that based just on the price action, based on the reactions, the market never reacts just to the same level. Yes, it is a bit tricky, bit different each and every time, but definitely we can underline the area, the zone. Yes, so right here we have very nice structure zone, structure shelf, and yes, based on the reactions, how many times we reacted to that area, many times, crazy reactions. And though the market broke that level multiple times, you can see that most of the time when the market reaches that, we see the reaction to that level. Yes, so this is our next structure. Now about the higher levels. Here it is a bit tricky. Again, look, over here, very nice structure level. Why? Because from that level, very strong, sharp, bearish movement started over here. Yes, we just dropped heavily once the price reached that level. And also in the past, over here in September, again we had quite strong bearish reaction from that level. So strong that we even managed to break our identified strong structure area right here. So this is the next level that we identified, yes. And the last one right here, the last one that I want to consider right here is the current structure high. Yes, current structure high, and though that level over here was reached only one time, though we tested that level only one time, you see that from that point, the sharp bullish trend has been violated, yes, and the market turned to a local bearish trend, yes, from August. Once that level was reached, you see that gold is very bearish, yes, so definitely this level was very important for the market participants. Buyers stopped buying, sellers started to sell. Definitely reaction here was just crazy. So this is the last horizontal level that we will consider right here. So right now the chart looks like a complete mess. So the next step will be the cleaning of our chart. Alright, just a couple of seconds ago our chart looked like a complete mess and it was quite difficult to understand what is happening right there. But here, just removing the price action legs, you can see how beautiful our chart is. Here we just have our major levels that we identified, we have our vertical levels, the trend lines, and we have our horizontal levels. Now let's discuss these levels in details and let's discuss how to play with them and how to apply them in our analysis. First of all, let's define here where are the support levels and where are the levels of resistance. So for that we need to identify where the price is right now. And you can see that the price right now is trading right here. So all the structure levels that we identified that are below our current prices, our current price levels will be the support levels. So here will be our first strong structure support, yes, and we make it that green. Then this trend line, this falling trend line right here will be the support as well. And here the current structure level will be also our support. So here we have two horizontal supports and we have two trend lines as supports, yes. And these levels right here that are above current prices, these levels right here will be our resistances, yes. Here are our major resistance levels. So here our resistances are just based on the horizontal structure levels, yes. And here we are, yes. Looks very nice, I think, and I really like how this structure analysis looks like. So now how we apply these key levels, how these key levels will help us to trade gold. And you must remember that key levels are just a magnet for the market participants. Once the market reaches a very strong support, we expect a bullish reaction from that. And once the market reaches a very strong resistance, we expect a pullback, a bearish reaction from that. And once the price is trading between them, we are just waiting until the price reaches either a key resistance or a key support. So here on gold, if the price drops over here, yes, here we have our major structure support. Yes, here, and also considering this trend line, here can be just a massive, strong area of support. And definitely from that area, we will expect a bullish move and we will look for the buying opportunities. And it will be a very safe buy zone for us. Yes. And if the price just keeps growing, if it reaches that resistance, from that resistance, we will look for a pullback trade. Yes, we will look for a pullback trade. And most of the time, what is funny, most of the time, once the price reaches a key resistance, where it goes all the way down to the key support. Yes, and once the market reaches key support, most of the time it goes all the way up to key resistance. And for you, it is crucially important to always check the reaction of the market to the reached key level. Why? Because occasionally key levels are broken. So if we just blindly trade them, if we just buy and sell them, not considering the intraday price action, we are risking. Yes, because as we already discussed, even the strongest key levels sometimes are broken. So for that reason, always look for reaction. And your homework for this Christmas holidays will be to learn how the market reacts to key levels. Just identify different key levels on different markets, take stocks, take currencies, take commodities, and just identify key levels there. Once you identify key levels, just look how the market reacts. Yes, just backtest and see how the market acts when it reaches the trend line. Most of the time when the market is preparing to break the key level, most of the time we see the kind of the pattern. Yes, sometimes it is very telling. And if the price is preparing for the reversal, for the pullback from a key level, again, it is very telling. We see this price action patterns like the double tops, head and shoulders. It is very, very, very telling. So just practice. But remember, key levels are the foundation of our approach, foundation of technical analysis. Trading from key levels, you will dramatically increase the performance of any strategy that you are executing. Even the fundamentals. Yes, even if you want to trade just fundamentals, trade fundamentals from key levels, and you see how efficient it is for your strategy. Hey guys, that's it, and the point that I'm trying to make is that never forget the foundation, never forget the basics of our trading strategy, and the foundation of our approach is the structure analysis. Yes, key levels identification. With the solid key levels, with the proper identification of the key levels, you will see the dramatic increase in accuracy of your predictions in trading. And during the vacation, during holidays, practice structure identification. On TradingView, you have this replay feature. You can analyze the market in 2015, 2016, and just keep practicing. Practice key levels identification, and you will see how it is important for accurate trading. And just the last thing that I wanted to tell you, I started this YouTube channel in February this year, and I'm very, very satisfied with the results. I think right now it is more than 3,000 followers on the channel, and it's just a huge number for me. I couldn't imagine that. 5 years ago, I couldn't imagine that someone will watch my videos and someone will watch my analysis on the market. But yeah, just checking the likes, dislikes on videos, I see that 99% are likes. Yes, all the comments are positive, very, very positive feedback. So definitely next year, I promise I will make the content even better. I have a lot of thoughts to realize, a lot of things to implement. Yes, so just stay tuned, and a lot of new things will come. So thank you so much, guys. Enjoy your vacation, enjoy holidays, enjoy Christmas, Merry Christmas, and thank you so much for being with me this entire year. Thank you, guys.